everyone. India's growth story has many chapters, but few cities have contributed as many bold pages as Bengaluru. Welcome to Standard Chartered presents CNBC-TV18 Leadership Collective, where we bring together the minds rewriting what leadership looks like in a changing India. We open in a state that has always played ahead of the curve. Karnataka is now among India's top 5 NSTP contributors with a 7.1% share of national output. It has the highest per capita income in the country, growing a remarkable 936% over the last decade. Its GDP share has gone from 5.5% to 8.2% in just 10 years, and on the global index, it ranks 14th amongst the top 40 startup ecosystems worldwide. So we begin here in a state that continues to raise the bar for Indian business and the city that has long stopped asking what's possible and instead asks what's next. Thank you for joining us this evening. We open the evening with a keynote from someone who has witnessed India's transformation across finance, education, policy, and private capital. His voice has often anticipated what the market would only later validate. To set the stage for India's next big leap from its current economic size to a $10 trillion ambition, please welcome TV Mohandas Pai, Chairman 314 Capital, co-founder and Chairman Iron Capital. Ladies and gentlemen, a huge round of applause.
Folks, thank you very much. The big challenge for India today is to grow the economy from 4 trillion to 10 trillion. Can we do it? The answer is an yes, and let me tell you why. 1991, our GDP in rupees was around 5,32,000 crores. It's grown to 331 lakh crores today in 31st of March 2025. That is 12.2% a year for 34 years in rupee terms. In dollar terms, it grew from $275 billion to $3.94 trillion. That's 8.1% a year in dollar terms, CAGR for 34 years. And from here, to grow to $10 trillion, we need to grow the GDP from around 331 lakh crores to around 9 lakh crores, possibly by 34-35. That's about 11% CAGR in rupee terms. Of course, the big zinger is the rupee-dollar rate. The rupee-dollar rate, if you assume at 85 and assume it stabilizes at 90, we should be able to do that. Out of 14%, 7% could be the nominal rate, 4% could be the inflation, with the rupee possibly depreciating to 90 and stabilizing to 90. I remember when I joined Infosys in 1994, the rupee was 27 to a dollar, went to 33, now it's come to 85, 86. So even though our GDP has grown, it doesn't reflect in dollar terms, primarily because of the rupee depreciation of 3.5–4% a year for the last 34 years. But in rupee terms, it's very clear. And the rupee terms is reflected in the PPP GDP. We are $17.5, $17.6 trillion in PPP. Across all areas of industry, traditional industry, we are number 2 or 3 after China, and we are going to be number 2 after 3 of China, because China today is about $20 trillion nominal and about $36 trillion in PPP. So can we be a China? No. There's room for only one China in the world, which is 30% of the world's manufacturing capacity, the largest exporter, possibly the largest importer, the largest holder of foreign currency reserves. But we can grow the economy in our own way, because we have to grow at 11% and we have to make sure it reflects. Today we invest about 31% of GDP. That's about 95 lakh crores or odd last year. And if anybody tells you, including CNBC, that India is not investing, just look at the national income statistics. You find all the data there. And sadly, most financial journalists don't look at data before they open their mouth and go with some trends. And some people looking at the CMI data, but it doesn't capture all the investment. It captures only the intent. And I think we've got to understand, our savings rate is about 29% of GDP, and productivity has indeed gone up all the time. So we have to continue investing at 31% of GDP. Now, if you have to grow from 4 trillion to 10 trillion, what are the things that we need to do? We have to invest 31–32% of GDP in the future. And large investments are going to go in technology. We have enough savings in this country to invest, We get about 2% of foreign capital coming from outside, and I think that's adequate for our purposes. The return on equity for our Nifty 50, Nifty 100 companies, Nitin, should be about 15%. And that's very, very high. There's a problem there which I will explain to you. So we have to invest. Second, we have to use more of technology to become more productive. There are only two things which increase the wealth of a nation: productivity of labor, productivity of capital. Even though Germans get much more money per capita as wages, they're the most productive people in the world, and even China, whose wages are maybe 1/5, 1/6 of what the Germans get, are not as productive. So productivity of capital, productivity of labor is very important, and we are possibly 40–50% of what China's productivity is, and for that we must use more and more automation and technology, which is happening in this country on a large scale. Then we must increase the productivity of capital. I was speaking to Shireen and pointing out one big challenge which we have to face as a country, which I don't see any debate in this country, in the financial press otherwise, and that is, what is the weighted average cost of capital for all countries above $4 trillion in GDP? United States, 32 trillion, China is 20 trillion, Japan is about 4.5 or 4.3 depending upon the currency, Germany is about 4.5, India is about 4, and the UK is maybe 3.5, and France maybe 3 or 3.25. For all of them, the weighted average cost of capital is about 6 to 9%. For India, it's 12 to 14%. Can we grow to $10 trillion with a weighted average cost of capital of 12 to 14%? We cannot. Because if capital has to earn that kind of returns, it has to be paid by consumers. It has to be paid by ordinary people, and they have to earn that much. And that means more share of the national wealth and value added goes to capital, which just cannot work. Because consumers have to get money to spend and grow the economy, because 70% of the economy is consumption. So we have to bring down the weighted average cost of capital, and for that, the G-SEC 10% rate should possibly come to 5 to 5.25%. It depends on inflation, which is now 3%. And we must make sure the RBI manages the yield curve better. The short end of the stick cannot be 6.2% and the long end 6.89%. We got to bring it down to about 4 to 4.5% or maybe 3% or 3.5%, with the long end going to about 5.5%. That will reduce it by 1%. Then we got to bring down the India risk premium. The India risk premium is about 4 to 5%. It's very important to understand why the India risk premium is high, and the India risk premium is high primarily because there is no confidence about policy stability in this country. The income tax department and many parts of the government routinely change the law and policy retrospective effect, and therefore people demand a higher premium as risk, and that has to come down. Jaitley did it, our former finance minister Jaitley did it by grandfathering the change in the capital gains tax when he changed it, and I think we ought to do that. The recent instance when our finance minister changed the indexation rule for capital gains was very wrong because it was a retrospective effect. I think Maruti lost about 800 crores because of the loss of the indexation benefit. We've got to be very careful and understand, because it impacts investors' confidence. And we've got to make sure that our contract laws and court judgments are in tune with what investors want, because investors are investing capital, and if they have more risk, they demand more. So we've got to bring it down, and we've got to bring down the volatility in the market, which will come with a much deeper liquid markets, which is happening in this country in a substantial way. And the next thing is, we got to make sure that we use all technology that comes in. We are in the age of AI. India is the third largest digital power in the world, 167,000 startups, about 220 unicorns till yesterday evening, maybe at 9 o'clock, I don't know today. We got to see what happened today. I'm sure Shireen will tell us. And they've created $600 billion of value. And we have about $120 billion of value in the public markets right now, up and down. And I do believe in the next 2 or 3 years, it could go to 1.5 trillion with 250 unicorns, provided we get money. The biggest challenge about innovation and startups in this country is the lack of investment. We invested $160 billion from 2015 to about 2025. China, $835 billion. United States, $2.35 trillion. When Mr. Piyush Goyal spoke about the lack of deep tech startups in this country, some of us told us and said, show the money. Where is the capital? Bangalore is the center of deep tech startups. You have startups in very fundamental areas of technology, deep tech, but they need capital to be there for a long period of time. Why is it we don't have an LLM? We could have the talent, we don't have capital. An LLM required $15, $20, $30 billion. And now ChatGPT is raising $30-40 billion at $500 billion. Look at the money pouring in the United States in AI. Where is the money pouring into India? And the money is not pouring into India because the policy framework do not allow such investment. The insurance companies have an AUM of 80 lakh crores. How much money have they put in technology and startups? Not much because of IRDA policies. I spoke to Sanjeev Sanyal and said, you must change. How much money have endowments and universities put in? Zero, because the investment policies of the finance ministry don't allow them to invest even 10% of the corpus. What about the pension funds? We got 40 lakh crores of pension funds, but in the MPS and the PF, they're not invested a single penny in startups or ETFs or fund of funds. So we got to ease the process. Today, India spends 9 lakh crores in subsidies, center and state. Why can't we spend 50-60,000 crores on deep techs and others to accelerate, because we can improve that? Take the UPI for instance. Because of UPI, today the currency in circulation has come down from 14.5% of GDP 3 years ago to about 11.5%. It's about 3% less in the last 3 years. And that means instead of people holding currency, the money is going into financial assets, into circulation, increasing the velocity of investment and reducing the cost of capital. So we got to make sure that more funding comes in and others. And the next thing is we got to expand our exports. No country has expanded, has grown in the economy without expanding its export. Look at the US in the late 20th century, or the late 19th century and the early part of the 20th century. China just now, after joining WTO for the last 25 years, or the Middle East, or the Southeastern countries, or any other country. We got to expand, and we have to increase the share of goods. We have about $485 billion of goods export. But the good news is our service export is growing in near double digits. We have a service export of $385 billion. We have a surplus on service exports of $215 billion, driven by software of $235 billion gross, $165 billion cash coming in, remittances of $125 billion. We have a $280 billion deficit in goods. And that is a big thing that we're not able to breach, and that's why it impacts the rupee-dollar rate. And the $15 billion surplus in services will increase this year and the next year because the oil prices have come down, and that could lower the gap. And when service export grows to meet the gap in our goods export-import, then possible rupee will remain stable. And the rupee doesn't depreciate, then I think we became a much more competitive economy, along with reducing the weighted average cost of capital. And I think we need to do that. Then we got to promote entrepreneurship. We need Shireen to come to Bangalore more and more, talk to startups, showcase them, make heroes out of them, like Nitin is here, a very big hero for all young people, very successful entrepreneur, totally bootstrapped, and a great guy. We need more heroes like that. We're going to create giant enterprises, invest more. I don't want Nitin to take a backseat and retire right now counting the cash that he's got in the bank. He has to invest much more and grow the economy, because we need a new generation of leaders to take India forward for the next 15-20 years, Shirin. You've got to spend more time here, encourage them, because the earlier set of leaders who grew the economy after the 90s when you opened up are now on the way out. We need new faces, fresh energy, because this is the age of the industrial revolution, and that is what we need to do to make sure that entrepreneurship becomes the de facto aspiration for younger people, and we become a nation of entrepreneurs, a nation of global traders that we were when we became very, very rich. And we also need to interact much more with government. There's a knowledge asymmetry between the private sector and the government. I do wish the Prime Minister will ask every minister in the Union Cabinet to have a set of 4 or 5 people to advise them on what is happening and what needs to be done, because the gap between in business and government is very, very wide. We have a set of consultants driving government, bureaucrats, which has to go because they need actual users to talk to them and advise them. It's up to them to take a decision, because the gap in the knowledge asymmetry has to come down, because the issues for us are very clear. How do you create enough high-quality jobs for our people? How do you make sure that we can grow investment in a very proactive way? How can we make sure that we create dominating positions in various industries? How to create a large export industry by reducing the cost of production in this country? The cost of supply chain, which is 12-13%, should come down to 8%. And all that is very important. And lastly, we have to create high-quality jobs. We used to produce 2.5 crore babies for the last 30 years, but the last 2 years come to 2.3 crores. The fertility for the whole country is 2.0 2 years ago. For the whole of the South is 1.7. And Tamil Nadu's population could shrink by 2035. The biggest challenge humanity has today is not climate change, despite it becoming very glamorous to talk about climate change. The biggest challenge for humanity is an aging, shrinking population. 25% of the world's population is shrinking. China's population of 1.4 billion could shrink to 575 million by 2100. Japan, 122, is losing 1 million people a year, could shrink to 97 million by 2050 and 67 million by 2100. And India's population of 1.4 billion could shrink to 900 million by 2100. 25% of the world is seeing a shrinking, aging population. Median age in Europe is 47 years. Japan is 47 years. India is about 29 or 31. China is about 36. And the United States is about 37. And that is the big challenge. When you don't have enough young people, people live longer. That means more money will go to sustain older people without younger people working for it in countries where you pay pension as you earn. And that's the challenge. So we have to create high-quality jobs. We create about 1.6 crore jobs every year, based on formal data of the EPFO for the last many years. But 80% of jobs pay less than 20,000 rupees a month. We've got to have 80% pay more than 50,000 rupees a month at the minimum. And for that, we have to make sure that they become more productive, the market expands, the cost of capital comes down, and productivity rises. Because it's only productivity that can give people higher income. And for productivity to come, we have to invest in urban India. The biggest tragedy of India is people think India is a land of villages. We are not. 45%, 50% of India is urban or semi-urban today, and political power resides in rural India because it is based upon the urban population of 1991 census. With the new census, we're going to see a political realignment where more representatives come from urban areas, and when they come up, we're going to have more investment in urban areas. Urban areas are concentration of human activity. Concentration of human activity increase specialization. Specialization increase productivity and higher income, and that's what brings in prosperity. Prosperity will never come in villages. Will come from urban areas. That's the history of the world, and we cannot do something against the history of the world. There's no romance in villages. It's not a very good quality of life that you can do in villages. 600,000 villages, out of which 15-20% have been abandoned by people. 70% of farmers' children don't want to go into farming. They want to join software or in technology. So I want to end by saying, we are on a great wicket. We are going to build this country to 10 trillion with the 85-90% probability by 2035. We are investing adequately. We have missed the digital revolution. We have young entrepreneurs coming up. Country is becoming efficient, and entrepreneurship is going up, and corporate profitability is at an all-time high, and that's going to continue. We have to work 70, 100 hours or whatever you want, Shirin. I can argue with you on that. But I want to say emphatically, we have a great future. Go for it, and we'll all do well. Thank you very much.
Thank you, Mr. Pai, for outlining what it will take to grow from $4 trillion to 10 trillion and what role business must play. Moving on, at a time when speed, trust and integration define the future of finance, our next conversation brings us to a space where institutional depth meets the startup drive to build fast and at scale. Steering this change is its leader who spent the past year creating room for partnership, velocity and shared vision across India's fast-moving ecosystem. Please join me in welcoming P.D. Singh, CEO, Standard Chartered India and South Asia, for a conversation on startup scale and the future of collaboration. I request Shireen Bhan, Managing Editor, CNBC-TV18, to kindly join us on stage to take this conversation forward.
Well, good evening, ladies and gentlemen. What a pleasure it is to be back here in Bengaluru. And Mr. Pai, I'm here quite often. I was here last week, and it is one of my favorite cities in the whole world. And the reason for that is because it does have that indescribable entrepreneurial energy. It does have the creative destruction that defines a hub of innovation and entrepreneurship, and that's what truly drives me. You know, it's very hard to follow Mohandas Pai because he does such a great job of setting the context of and laying out the numbers. I'm only going to quibble on one number, Mr. Pai. The rupee is closer to 88 today. So that's the only thing that I'm going to quibble on. And the cost of capital, today we've seen a status quo policy from the RBI and the MPC, so at least no reduction in the cost of capital just yet. But without further ado, we're talking about what it will take to nurture India's startup ecosystem, to create the heroes of tomorrow. We have many of them here with us in the room today. And this journey of focusing on India's startup entrepreneurs is something that I started 23 years ago on CNBC-TV18 on a show show called Young Turks. And many of the entrepreneurs that you will hear from today have been part of that journey, have been part of that story. So we feel particularly grateful for being given the opportunity to witness the change and to see this ecosystem flourish, and we hope that it continues to thrive. It is my pleasure to welcome PD Singh to this conversation today. Thank you very, very much. And it's been a year for you at Standard Chartered Bank now to kind of rev up your ambition on what the bank needs to do. To take off from where we are today in Bengaluru, the startup ecosystem, the startup ambition, bank financing has not been part of the picture, part of the story so far. I mean, taking off from what Mr. Mohandas Pai there was talking about, do you see a greater link now between banks as well as the startup ecosystem?
Yeah, thank you, Shireen. Lovely to be here, and thank you for inviting me for this chat. You're right, banks have been closely associated with the startup ecosystem, and I do remember Young Turks, and I used to watch it, so it was a very interesting show, and very happy to see lots of those folks right here today who are very successful. So banks have been closely associated with the startup ecosystem for a very long time. If I can say, in the first phase, providing them the banking rails, providing some of the tech startups the banking rails was the first phase that we saw. During that phase, we also learned about how this ecosystem is growing and what the startups require. Each one had a slightly different requirement. So for example, a very fast-growing tech startup would require a B2B platform, or would require someone who can do the reconciliation for them. So that's where I think the bank stepped in, and the bank could do a good job of that. In the next phase, there was a mismatch between collections and payments, and that's where probably working capital, etc., came in. As I think these startups have matured, there's also been acquisition finance, there's also been long-term finance, and selectively some of this has also taken off. So setting this context, if I look at our own journey in the bank and take an example, like I told you before we had a chat that I love giving examples. So if you look at how a fintech player was eventually scaling up and the requirements that they had. So it was a requirement for very fast payments to happen, setting out the payment rails. In one of the cases, they required a sponsor to be part of the Bharat Bill Pay system, and that's where the bank could add value. In another case, where a quick commerce company required very quick ability to make sure that they could make payments to the constituents, and ultimately when it grew and acquired subsidiaries, some of those subsidiaries required distributor finance or other stuff which came in and built upon that. So in every phase, I think there is a role that banks can play with this ecosystem.
You laid out very well the phases that we've seen so far. But as we step into the next phase, as we look at scale, as we look at the possibility of many of these entrepreneurs also looking at global markets, what specifically do you believe the role that a bank like yours can play to fuel that ambition, fuel that fire?
So as the ecosystem grows and as the startups achieve a certain scale, they want to acquire other companies, so you need an advisor to help them firstly identify that target, then to also make sure that the financing is done in the right way. As they scale up, and the ambition is to go to the capital markets, as you've seen so many of our colleagues here doing that, you need pre-IPO finance, you need to bring in probably private investors into the mix, you need some kind of bridge finance at times. A lot of startups have gone and accessed international markets, so they want to grow their business overseas, and they also want to get funding from offshore. I think that's where the super connector banks that have offshore operations, have a network in place, those are the ones that can act as super connectors and make sure that these startups understand the new ecosystem that they are going into, which could have regulations, it could have market nuances, and all of that can then be brought in a sensible way to the core of the business.
No, absolutely, and I think Nitin is here with us, and he will be able to speak to the changing regulatory architecture and framework and what a significant impact it can have on business. But just to build on what we heard there from Mohandas Pai in terms of the enablers, in terms of the themes, in terms of the sectors that will drive the next wave of innovation and entrepreneurship, what do you see on that front as the next big triggers?
So the first thing, as you heard, is access to finance. So we've been lucky, $5.7 billion has come in just in the first half of the year from Jan till now. We've seen a number of M&A transactions that have happened as well. So I think first, access to capital at the right time and the right quantum. So that's the first enabler, I think, which is very important. The second, I think, is the understanding of the regulatory framework. A lot of them don't or probably underestimate the kind of regulations or the frameworks that they get into. And the third is when you have understood that the model works, the ability to scale and stay sustainable. I think these are the few things that are extremely important in the next phase of growth for a startup.
I think we have seen cautionary tales of entrepreneurs who have underestimated regulatory and compliance related issues, and I think there is a maturing of the ecosystem that we've also seen. There's an evolution that's taken place and we're all better for it. But in your conversations that you're having with startup founders today, what do you believe are the key challenges that they continue to contend with, that they continue to cope with?
So the good part is startups are now coming from tier 2, tier 3 cities as well. So this is a more inclusive entrepreneurship story that we are seeing. During these phases where they are able to test their hypothesis and grow. So I talked about $5.7 billion of funding coming in.
Yeah.
2 billion of that has come in the growth phase. 3 billion has come in the late phase. It's the startup phase, the actual when rubber hits the ground. In that seed funding phase, we've seen a number of transactions of smaller value, and that's where I think a little more work can be done. And Mr. Pai was also alluding to that. And that's where when helping startups find their feet and moving through the various phases, including that of globalization. So when they move overseas, I think that's also a part when they are exposed to risks they haven't thought through completely, including currency risk, which you spoke about
Yes,
just now.
the currency risk is a key risk at this point in time. And as Mr. Pai was saying, the cost of capital is, it's not the big point of discussion and debate today. I think weighted average tariff rates are the big point of discussion and debate today. And hopefully, in a short while from now, we'll probably see whether we've been penalized or not by the US with a higher tariff rate. But, to the point of capital, and the government in the last budget had announced a 1 lakh crore rupee corpus to fund deep tech startups, and that's finally now being operationalized. And what's interesting is that this will fund private sector enterprises as well and startups also, and separately the Quantum Mission is also picking up equity in startups who are in that space. So we're starting to see some movement on that front. But you alluded to consolidation and M&A, Mr. Singh, and we're starting to see that happen. We're seeing the big boys pick up startups. We're also seeing startups integrate with one another, sometimes on account of investors driving the consolidation. But do you see more and more of this consolidation taking off?
So a lot of this consolidation, we have to look at the drivers for some of the consolidation. So a lot of this happens because the financing doesn't come at the right time. 70% of startups fail because of the timing of the financing that comes. So there's a lot of money available, but at what stage is this money available and made available to them? So at that time, if the money is not made available, then I think it's a good picking for the rival to come in. At other times, there is too much money chasing a sector. So because of that, there is unsustainable growth that is, and it's the winner takes it all. So you wait till the last man is standing, and then you're the one who can acquire it. So that is some part of the unhealthy competition that also comes in and drives that acquisition behavior. The third part is adjacencies. So there are a number of adjacencies that come in through this value chain, and as you add those to your product suite, your valuation goes to a different level. So it's a game of valuation, sometimes to the extent that it becomes unhealthy, and they don't raise money, like I said, at the right time, and then it becomes too late. All of this leads to a lot of consolidation. in M&A. But the good news is private equity, venture capital is all there. They're very bullish. We've seen the journey over the last 10 years. There's a lot more to be done. There's a lot more to be done.
No, there is certainly a lot more to be done, and you're speaking about private equity, and I think 2024 record inflows into India from private equity and venture capital firms, and more importantly, buyout deals. I mean, we've seen a whole bunch of buyout deals taking place where private equity picks up a controlling stake, and of course there is the conversation on promoters wanting to exit at this point in time because of a lack of a succession plan, or their decision to exit because the valuation is mouth-watering, and of course family businesses running family offices, which is the new trend as well, and what that means as far as entrepreneurship is concerned. But finally, regulatory challenges, what do you believe the road ahead on that front looks like? How much of a deterrent is that going to be to growth for the ecosystem? And what role do you see Standard Chartered playing for startups in India?
So to address your question on the regulatory challenges, firstly, I think the Government of India has done a lot recently, and the ecosystems that are being built up even through public-private partnerships and even purely in the private space has been very encouraging. The second bit, like I mentioned to you, regulatory challenges exist because of the speed of decision making. So some of it Mr. Pai alluded to, speed of various specific things, like for example, someone could be badly impacted by patents. Someone else could be badly impacted by clarity on tax. So the speed of some of that clarity could help. Once you're already committed and then you're hit by a regulation which you didn't anticipate, then I guess it's very difficult to backtrack on stuff that you've spent already. So yes, I think some clarity in policy is very important for a startup more than for a mature company, because they have very little wiggle room to grow and to readjust their path.
Yes, and agility clearly, and nimbleness is
Yes.
the need of the hour and the name of the game at this point in time. Since you're spending so much time with entrepreneurs, let me end by asking you, what do you take away as inspiration? If you could start up today, what would you want to do?
So a startup is very hard work. It starts with an idea, and you need to believe that idea is a real world requirement. You need to test the hypothesis, then you need to put money behind it, probably your own. So it's very tough for a startup entrepreneur to actually convince a whole lot of people that this is the need of the hour, and this is a better need of the hour than the idea next door, because everyone here has a startup in their head. But what really inspires me is the manner in which, the diligence with which I think a lot of these ideas have actually grown into real world solutions, solving issues that are large and adding value to mature businesses in economies like ours at scale.
Well, if you have an idea, he's made it very, very clear. Standard Chartered is going to be writing out checks for those of you who are interested. PD Singh, what an absolute pleasure. Thank you very, very much for joining us here at the Bengaluru edition of the Leadership Collective. Appreciate your time and look forward to having more conversations with you in the future. Ladies and gentlemen, a big round of applause.
Thank you. My pleasure.
Thank you so much, Mr. P.D. Singh and Shireen, for that insightful conversation. Ladies and gentlemen, once more for Mr. P.D. Singh. A huge round of applause. Moving on to our next conversation, India's digital public infrastructure is one of its strongest global narratives today, but it's what happens between platforms and people that sets a benchmark. In Karnataka, that distance has been reimagined with grievance redressal engines, end-to-end mobility stacks, and citizen-facing metrics that have turned accountability into everyday access. To take us inside the operating system of accountable statecraft, please welcome Dr. Shalini Rajneesh, Chief Secretary to Government of Karnataka. Dr. Shalini, many thanks for joining us today this evening. Now let me start by asking a very open question. Bengaluru didn't become India's startup capital overnight, and Dr. Shalini, you've been part of the state's journey for over decades now. Tell us, what were some of the early bets that Karnataka made on infrastructure, on policy, and on people that laid the foundation of the innovation hub that we see today?
First of all, let me thank CNBC and TV18 Network for inviting me to this wonderful galaxy of leaders collectively talking about not only just Bangalore, but entrepreneurship development as a whole. And we look forward to taking the global leadership, that place. Well, it's been about 36 years that I have been in Karnataka. And the very culture of the administration of Karnataka, I think, is the core factor for encouraging entrepreneurship in general, and startups and IT and deep tech and global tech and all kinds of technology-driven enterprises in particular. So the officers, right from the time I have been introduced to this cadre, are very, very particular about citizen-centric governance, the accountability, the transparency, and all that is being fueled by the e-governance initiatives of our state. So we are always pioneers in connecting to the people and to the stakeholders, and that projects have been becoming national projects and sometimes even international replicas. So I'm really proud to be part of the team.
Sure. So let me pick up from what you just said, that, you've led some of Karnataka's biggest governance shift, from the Sakala mission to Karnataka's DBT reform. When you look back, tell us what has been the toughest part of putting systems in place that serve people and not just policy. How have you been able to do that?
Mindset change was the biggest
That's
challenge.
the most, yes.
Was the biggest challenge, but also was the most important and the most benefiting. Well, we are blessed that we have a very visionary leadership, which led to this kind of a legislation. It's not one man's job. It is the entire legislature which wanted a time-bound approach to the citizens' needs, and more particularly for industry as well. And very recently, Honorable Chief Minister has launched the integrated portal for ease of business during Invest Karnataka thing. So the biggest challenge for us was that how do you make our government employees from top to bottom sensitized about the fact that delay is deadly.
Yes, delay is deadly.
So as you know, the caption goes that we deliver in time. And we are proud of that fact, that we deliver in time and no more delays, So we made that into a caption. So it was a workshop like this where I called all my employees association to begin with, and I said, what is your brand image? We are all very proud of Karnataka's brand image and Bangalore's brand image. What is government officers' brand image?
I want to know the answer.
It is obvious. Yeah. But then I said, don't you want to change it? Don't you want people to look up to you and say, these are government officers, who are facilitating change, facilitating entrepreneurship, facilitating development. And there was a unanimous yes for that. That's what made us go for the mindset change. And we said, let's step into the shoes of the person who is seeking any service. It can be a certificate, it can be a license, it can be a simple permission, or whatever it is. They are seeking a service, and we are here in this job to provide that service. And if we don't do it in time, then there's no point.
Yes.
So as they say, justice delayed is justice denied. So if service is delayed, it is service denied.
Absolutely.
And what's the point in our being called the administrative service if you're not administering it in time? So there was a sudden change of mindset in the sense that, yes, we have to bring in a positive image of government as a whole. And they then took the responsibility of, I have 5.5 lakh employees. And these employees association people, they took the responsibility of changing the mindset of each one of them, saying that, look, you decide the timeline, but then stick to it. Don't go back on it. I am very happy to say that in 2011 when these deadlines were fixed, we have been continuously reducing those timelines. So we have been making ourselves more efficient through business process re-engineering and seeing to it that how fast we can provide the service.
And we'll delve deeper into that, but you spoke of changing mindsets and you spoke of stepping into citizens' shoes. In fact, Karnataka recently piloted a digital grievance redressal system in Melukot, bringing resolution literally to citizens' doorsteps via mobile app. Now tell us, ma'am, what does the signal about the access future systems must guarantee?
The access.
Yeah, like, you've done this via mobile app, literally gone to the citizen's doorstep. So
you have to change with the changing times, isn't it? Now today, everybody is so comfortable using a mobile app. So if I tell them to go to a cyber cafe, that is an obstruction by itself. So I don't know what's going to be the next change of technology that people are comfortable with. But from our point of view, we have to see the convenience of the user. And tomorrow, if they are more comfortable with, I don't know, I'm really thinking what would
I was about to ask you what's next.
The task is that we should change to their requirements. For example, when COVID was there and you had senior citizens, for example, they would not be able to go to the ration shop or to the bank to pick up that little pension or whatever money the government was giving. And we had to take it to the doorsteps. We had to entrust it to the Gram Panchayat leaders to take it to their doorstep. And now we're doing it for ration also, for example. So the only thing is, if you are tuned to it, that you don't exist for yourself and you don't exist for continuity or lack of change. You are here for change in tune with what your user demands. Then you will certainly adapt.
Absolutely. And your work in grievance redressal, and you spoke about making it time-bound and trackable. This has influenced policy making beyond Karnataka. What really drew you to this issue in the first place, and what did it teach you about citizen expectations from the state?
See, I feel that grievances-led reforms are more sustainable. Because unless I know where the shoe is pinching, how do I correct it? So, thankfully, we had a very active call center executives. And when we trained them for Sakala, for example, I said, even if it is not Sakala service related grievance, you please record it. And each feedback of the citizen, each concern of the citizen is giving me another door and a window to open as to where do I need to improve. And without probably their telling, I wouldn't have known. I would have thought everything is fine. But when they say, no, look, this is the problem. I'll just give you a quick example of one.
Share some stories with us.
Yeah, because a lady who's working in Infosys, she sent me a message saying that, look, I'm having a lot of problem in getting a khata in a Gram Panchayat. And I said, it's a Sakala service. Why should you have problem? When I checked from the records, it is shown that the reply has been given to the applicant.
Okay.
But she has actually not received it. And she says every time I contact them, they said, meet us and we'll do it. So that's where the gap was.
The typical government reply that you get.
So the solution then lies that, okay, now the platform that the government officials are using within their closer network should be made open to the public domain. That itself is a preventive aspect. So if everybody knows that you are being seen, they will not do this mistake.
All right. Let me shift focus to the fact that today Karnataka is not just a startup hub, it's emerging as a biotech hub, it's emerging as a deep tech hub as well, but it takes more than just startup capital. So tell us, what do you see as the government's most critical role in shaping India's next wave of innovation?
Mr. Mohandas Pai has already...
He's given a long list.
Yes, we work together. He is our friend, philosopher, guide. When we worked out on a document called Trillion GDP for Karnataka, there were a lot of things that we need to work on. But then I think it's the infrastructure which we'll have to focus upon. presently when we are having such a huge flow of people from all over, not just the country but the world. They are getting attracted to this place, and they are wanting to make, let's say, Bangalore a home. So we have to upgrade our infrastructure to the requirements of that. It's just that the flow is not very predictable. It's been going at a very, very high speed. So we are probably lagging behind on that, but then the plans are afoot. Honorable CM, the entire cabinet, and particularly the DCM who is in charge of the Bangalore city, lot of projects, and I'm very happy to say that on this Sunday, Honorable Prime Minister will be inaugurating the metro and many of the railway projects. So infrastructure is very, very important. In that, the logistics part of it, but then the policy wherein we make the public and other stakeholders and the investors become a partner with us. That's very important. So if only government is going to do it,
no, it's not
that's
going to
not
work.
possible. Yeah. So second is that, the ownership that people, I'm sure those who have made Bangalore their home must be having that feeling of ownership, right? Now, if Bangalore is home, then will you keep home dirty? So that's where the citizen or the stakeholder participation is very important. We should not allow that garbage or things like that happen. We should also try to contribute to the governance in various ways. And I'm very happy to say that, whether it is resident welfare associations or sometimes even industry associations and other youth bodies, they come forward, they take initiatives. So we need more of that. So with that ownership, with that pride, I'm sure if we all work together, we will certainly catch up with the dreams.
Absolutely. Working together is key. Now, before I wrap up our conversation, you've worked deeply across skilling, entrepreneurship, and, women innovation especially. What changes on ground make you feel hopeful, and where do you think we need to push boundaries harder, especially to ensure that the next wave of innovation comes from each district and demographic?
Ultimately, the grassroots. So our grassroots will be the primary education, right? And I'm so happy to say that Karnataka has always been #1 in contributing innovative ideas from the schools of Karnataka. Many of them are government schools, and it is in the annual competition that the Department of Science and Technology holds. 40,000, more than 40,000 innovative ideas are coming from our children from the government schools, rural areas, and so on. And those small little innovative ideas, when we can take them to a level of refining them, and many of them have reached the commercial level, also the getting the patents and stuff like that. So anyway, the point I'm saying is that we are trying to make our primary and secondary education as our core.
Okay.
We are making every government school in a village as good as any public school that anybody can afford. We are making quality education as our highest platform. We are trying to include skilling and IT in the higher secondary level itself, so that these are the people who are going to make the HR of tomorrow's startups and enterprises.
Absolutely. And on that futuristic, optimistic note, I would like to wrap up our conversation. Many thanks, ma'am, for joining us today this evening. It was an absolute pleasure speaking with you.
Thank you so much.
Ladies and gentlemen. Ladies and gentlemen, up next is a conversation that rewrites the rule of what scale can look like. I would request Shireen to kindly come back on stage and take this conversation forward. And joining her are two founders who've built from first principles quietly, consistently, and without chasing blitz or burn. One changed the way India eats, the other reimagined how India invests. Both build platforms that are trusted not just for what they offer, but for how they operate. Please welcome Funny Kishan, co-founder and CGO Swiggy, and among the earliest members of the founding team. We also welcome Nitin Kamath, founder and CEO of Zerodha, who changed the face of investing in India. Shireen, over to you.
Promise we're going to bring you the new heroes of New India, and you have two of them right here. Bengaluru boys with us, Nitin Kamath and Funny. Many thanks. I'm going to start in order of seniority. They've completed 15 years and Swiggy has completed 11. So I'll start with Nitin purely in order of seniority. You know, we heard from Mohandas Pai on the ambition of going from 4 trillion to 10 trillion. We heard from the Chief Secretary here as well on what the state is aspiring as far as its own growth potential is concerned. Nitin, you're always a little bit circumspect on what the case for India is, what the hypothesis for India is. So let me start by asking you, as you look at where we are today relative to what's happening in the world, given your own growth ambitions, the diversification that you're already doing at this point in time, what is the bull case for India?
No, the bull case, I think we are the only economy in the world growing at the pace that we are growing, as in it eventually has to show up everywhere.
Eventually has to show up. What does eventually have to show up mean? What are you talking about?
No, I mean, in essence, our GDP is growing at the pace, and it's showing up in different places. And whereas, of course, the tariffs, etc., are concerned for now, but I guess it's after 3 months we'll just look back behind this, So.
Yeah, I would imagine that the tariffs are not going to have a long-lasting impact, as and when we do have clarity on what the final rate will be and whether we're going to be penalized or not. But the larger question I'm trying to understand from you is that, we hear about the consumption story, and we've heard many people talk about how this is going to be the consumption decade for India, this is going to be India's century, and so on and so forth. As you look at the opportunities that Zerodha, for instance, is looking at this point in time, break that up for me. What do you foresee as the actual consumption that's likely to take place? How many people do you believe are going to be opening more demat accounts, getting onto Zerodha? I mean, what are you building in as estimates for yourself?
Yeah, so, whereas now we claim that there are 20 crore demat account holders, but I'd say there are 4 to 5 crore unique Indians with any kind of a stock holding or a mutual fund holding. And we believe that number can be 10 crores over the next 5 years. And that's going to be like a significant growth for the markets. In terms of the stocks itself, there's enough and more supply coming in. I mean, like Swiggy.
Yes, like Swiggy.
So.
But not Zerodha.
I mean, for now, no, but yeah.
That's a change. For now, no. For now, no. Yeah, otherwise it's always been no and never going public.
Yeah. Yeah. So, and basically, so we run the investment initiative called Rainmatter through. We've invested like 1,400 crores over the last 1-2 years and last 3-4 years, and the idea is that we are bullish, and we are as bullish as it can be, So
before I get to Funny, and that's a big number. I don't think people understand that Zerodha is actually the new VC, the new private equity player in town. 1,400 crores in the last 2 years invested in startups, in the startup ecosystem. What could that number potentially look like in the next few years, Nitin?
No, I mean. We kind of see, the thing is we have
a lot of cash.
We have a lot of cash, and it's basically the opportunities that come about. So as and when more opportunities open up, we're gonna cut bigger checks.
Okay, so you'll be cutting a lot more checks. Funny, let me come to you now. I mean, your story is very different from the Zerodha story, the Swiggy story. 11 years, as I pointed out, but they bootstrapped. You didn't. You've of course gone on to list list on the Lal Street, which Nitin doesn't intend to, at least for now, is the new word that's coming in from him. But as you see India grow, and with the many bets that Swiggy is taking between Instamart and of course food delivery and the live space, live economy business as well, what do you believe this could look like over the next few years?
Yeah, I think we are fundamentally big, massive believers in the Indian macro story. You know, I mean, I'm sure there are going to be ebbs and flows. There are going to be good years and bad years and tariffs and whatnot. But we do believe in the longer term, it is the story to bet on. We had a chance a few years ago, or I don't know if a chance, but we thought a few years ago if we should actually diversify into international markets, probably the best decision we made, focusing on India, etc. And see, people say we are, I don't know, 10 years behind China, 15 years behind China, 20 years behind China, but I mean, it doesn't matter. If you're going to willing to play the long term, we do think that there is enough amount of compounding that will play out. Even a 7% compounding over whatever 15 years is going to be massive in many ways, right? So we're big believers. Our story, our focus has historically always been on the broader theme of convenience. I don't think we play across the rank and file of India yet. Our focus is still on the top 100 to 100 million Indians. And while today we kind of actually cater to maybe, I don't know, 20 million people, 25 million people on a monthly basis, our long-term ambition has been saying, can we imagine a day where 100 million people transact with us?
When do you believe you're going to be able to see 100 million people transact? Because, you know, again, I come back to the point that people make about the addressable market, which is very, very large, but then the actual market that you're actually servicing, and the distance is large, the gap is large. When do you believe you're going to go from 20 to 25 to 100 million?
Yeah, see, there's a famous quote, right? You always overestimate the short term and underestimate the long term. So I'm very skeptical of coming and saying, is it in 5 years, 10 years? I don't think it's in the next 5 years. I think it's still probably 10 years away. But then a 15% compounding over 5 years is like more than doubling the business, right? So I think, yeah, it's in that ballpark. I think in the next decade, we probably, hopefully, have enough amount of services, whether it's the quick commerce story, the food story, we are thinking of introducing a concierge. Our ambition is just to be the operating system that powers people's lives and makes it a lot more seamless, right? There's one part of it where India should get richer. That's really not in our hands beyond a point. I mean, there are people better than us to drive that. We are banking on them at some level, but we want to be there when the opportunity does turn up, and we want to capture it with both hands.
You know, so you said getting to 100 million, hopefully in the next 5 years, give or take a few years here or there, but that's the aspiration, or that's the hope at this point in time. What about profitability? That's in your control, because I think one of the larger questions asked of the startup ecosystem, especially as we see many companies like yours list now, is, you know, we're seeing revenue, and, you know, we've seen significant growth as far as revenue is concerned. But, you know, how long before we start to see profitability?
Yeah, I mean, if you're talking about the broader ecosystem, I think people have already demonstrated profitability, and I mean, some listed, some not listed as well, right? But if I just talk about Swiggy for a moment, of course, our food delivery business, which is now entering its 11th year, is profitable. We are a public company. We list our results. We just our results last week as well. So we're a profitable company, continuing to scale, and the leverage is very clear, right? Every quarter we gain that 20-30 bips and just goes into the bottom line. So we were quite comfortable with how the food delivery story has played out. If you look at the quick commerce space, it's less than 5 years. We're just coming up on our 5-year anniversary, and it's a multi-decadal opportunity, right? And the way we think about it is, you know, in a business that's probably going 15-20% year on year, like the food delivery, it's important to actually demonstrate profitability and go for it. But in a business that's growing more than 100% year on year, where the market opportunity is so much more larger, it would be a disservice to the opportunity to not invest, right? So in that sense, it's not that we want to spend money because we have a lot of
money
it.
just for the sake of spending
No,
money.
because it's the right thing to do at this stage and age. And different people have different philosophies. We're not going to go and try to change people's philosophies on that. But we do think this is the right investment for the future. If you look at how many million people are coming into the category, what is the size of the category at this point of time, we think there's a big headroom for growth. And the right thing is to acquire users at this point of time. So at a broader company level, we have also given some broader guidance. I don't think it's some pie in the sky, some dream that we're not imagining. It's probably a few quarters down the line.
You know, since we're talking about quick commerce, and I think this is something that's been debated very often, there are those in the camp that say, what's the big deal? What's the great innovation as far as quick commerce is concerned? And we've heard many of those comments coming in. How do you respond to that? And why do you believe quick commerce has been so unique to the India story?
Yeah, I think obviously a lot of us here have wondered, who wants things in 10 minutes? Turns out everybody.
And all kinds of things, all kinds of things.
Yeah, I mean, I'm sure if I just do a show of hands as to how many people have used quick commerce, it would probably be many, right? I think we start off as a distress need. Even when we first started out, it was these 2,000, 3,000 products. It started out as a distress need, started out as an indulgence need. It's, 64 runs required of 30 balls, India versus South Africa, World Cup final happening. You're not going to order that popcorn or that Coke if it is not going to come in 10 minutes, right? And then you're not going to order, or you can imagine a distressed mother at 12 o'clock in the night where the kid is not feeling well and you want, a cough syrup or a cough drop. You need to be there. So the use case for us has always been this, I need it now, is how people come in. But then you realize that, you can actually get everything that you want.
Yeah.
And that, is kind of like an addiction in the sense that, once you experience convenience, it's very difficult to go back.
Yeah.
Right? I mean, I'm sure we've all grown up in, traveling in buses and trains, and then you take a flight and then you're like, it's so much more convenient to do this.
Yeah.
And you try to do that, right? So our belief is to deliver convenience. We want to keep expanding our service offerings to make it better. For us, when we started out, we were in 2,000, 3,000 products. Now we deliver 20,000 products, more than 20,000 products.
So the lines between quick commerce and e-commerce have blurred essentially, haven't they?
Yeah, I mean, I don't think we wake up thinking, we didn't coin the term quick commerce, to be honest, right? We wake up thinking, what do consumers want? We didn't start selling, heaters in the winter because we just wanted to push it to consumers. We just saw that a lot of people, consumers are insatiable in their desire for convenience and stuff, right?
Yeah.
You see a bunch of people opening their phones and asking for heaters. By searching for it on our platform, you realize you need to start selling them in many ways. Yeah. So for us, we are almost always one step behind the consumers, right? Like for example, we had, I don't know, in the recent Akshaya Tritiya or Dhanteras Day, a consumer bought 8 lakh worth gold on our platform.
Who would have thought?
Yeah,
who would have thought that this was going to be possible? Yeah.
Yeah. Right. And it happens. Right. People's needs keep changing. When we started out, we used to deliver in 30 minutes in Instamart. Right. Now if we deliver in 30 minutes, we're going to get brickbats. Back then it was like, wow, what is this service?
Yeah.
So our job is to constantly keep trying to interpret what consumers need and be there for them. And when we talk to brands, we start also observing that a lot of them are quite, they don't look at it as a channel play, right? Which is, hey, people were previously buying it from, place A and they're buying from place B. In a lot of cases, the consumption itself is increasing. Yeah. Because if you didn't provide access, they would have deferred the purchase or they would not have purchased at all.
At all. Yeah, that's me. That's me. So, no, but you're right, because I've had so many conversations with CEOs who say that quick commerce has actually changed the fulfillment expectations. It's across sectors, from banking to just about every sector. Everyone now wants 10-minute deliveries, and it's changed consumer habits and fulfillment expectations altogether. But, Nitin, while we're talking about staying ahead of the consumer, let's talk about regulation, because, innovation and regulation have always had this relationship where innovation has tried to keep pace with regulation, and often regulation has come later than innovation. You're one of the very courageous ones who go out there and speak quite clearly and candidly about how regulatory change is likely to impact you and has impacted you. When the F&O change happened, you came out and said that it is going to have a significant impact as far as your business is concerned. When something like that, when a seismic shift like that happens, how do you cope with it? How do you prepare the organization to deal with it? And how do you stay ahead then of that change?
I think as a business, I think it's more cultural. We are always picturing out the worst case outcome. So, and everyone's kind of wired that this could be the worst case outcome of any certain regulation or anything for that matter, right? So all of these things were really expected of sorts, like even the STT going up. STT going up, significantly, is detrimental to active traders. So, it's inversely really proportional to trading volumes. So trading volumes automatically drop. So, I think it's that. It's just being, kind of looking at the worst case sort of outcome and making peace with it, and then try to figure out what's the best you can do. So. That's how we've been working.
So as you said that you have no control on what the regulator may or may not do. You can only influence your response. Now, take me through what you've been able to do on that front. You're also diversifying into a whole new set of areas. You've got a whole new bunch of opportunities that you're looking at. Is this also part of the de-risking strategy? Is diversification also part of the de-risking strategy?
No, absolutely. So because one of the reasons why we don't want to list is because majority of the income today comes from broking, and broking is a extremely risky business, and essentially most people will look at the last 6-7 years and assume that this is how broking is.
Yeah,
but
you can deliver 5,000 crores in profits.
But I remember back in 2007 and 8 there was a broker who was valued at around 1,000 crores, and in 2010 he was at 200 crores. Same broker, same same team, and etc. So essentially we are trying to diversify, and what we have taken a stance is that we don't want to build all these things ourselves. We will instead find good entrepreneurs and take a meaningful stake in them. So we have Ditto, who's building our insurance piece. We have a joint venture with Small Case for the AMC. We have the NBFC. We have building it in house. But like this, so there are like different partnerships that we are running, and they are still very early. They're not more than 3 to 5 years old as of today. So basically, in 10 to 15 years' time, maybe each of these will potentially, add meaningful revenue to the business. So.
Yes, nascent at this point in time, but the hope is that they'll kick in both in terms of revenue and profit as you move along. I know in terms of aspiration, the aspiration continues to be to eventually, at some point, if the regulator permits it, be a bank.
Yeah, of course. So the banking is something that, if the regulator allows tomorrow, we'll be the first ones to apply.
The first ones in line. I don't know what Standard Chartered is going to have to say about that, but nevertheless, that is clearly the aspiration. But funny, you said that convenience is what is driving strategy and what is also driving diversification for you at this point in time. Are there boundaries that that you've set in terms of what you believe you should not do, or the spaces that you should not address? Where do you believe you have the most right to win?
Yeah, see, I think we don't start off by thinking about what is our right to win. I think we start off by thinking about what is the consumer problem that we deeply care for, and that's in the convenience domain, right? So we do have some boundaries that we have set. We still think we're building for the top 100 to 200 million Indians in the country at this point of time. We are building more for urban areas than rural areas at this point of time, and definitely problems that we think cater to convenience of the users, right? So that's, I don't know if it's limiting, but we didn't want to start off with a very limiting vision as well. But these are the bounds that we've set. So we start off by thinking what are the problems that consumers face. So far, the two businesses that we built are things that we as individuals also would use. And actually it's been probably true of everything that we've built so far, right? We're now experimenting with the concierge service, which is again built for the top affluent people, and we can see ourselves using the service. So maybe there's a little bit of bias for, we want to build for problems that we see around us, more than something that we can't relate to. right? It's not happened so far. I won't say we'll never do it, but that's probably what naturally comes to us. And then we start asking ourselves the question saying, okay, to win in this space, what do we need to do, right? Because if you start off by saying, what is it that you're good at and what can you do, then the whole world looks like, it's a hammer looking for a nail, right? So if it means that we have to build new capabilities, when we started out Instamart, of course, we had to build a bunch of new capabilities that we didn't have to before. But we backed ourselves to do it. We need to be clear about what is required to win and how will we win, and back ourselves to be able to do it. There have been places where we said this is completely out of line for us. I mean, we've never really thought of getting into the financial services because we don't really understand it.
Not yet.
No, we don't really understand it, to be honest, right? And maybe there's some pain points that we would have, but there are enough number of people who are doing a good job at solving that problem, so we don't touch those.
You're not looking at getting into food delivery or quick commerce either, right?
No,
You'll Swiggy for that or Instamart for that.
Yes.
But as entrepreneurs, and funny, let me start by asking you. Mr. Pai was talking about the challenges that entrepreneurs have to face, whether it's capital and so on and so forth. Capital clearly is not a constraint for either of you at this point in time. What do you see as the big deterrents to scale, as the big deterrents for growth today?
I think capital is a problem, but I think that comes later, right? I think the first one is basically you need to find a problem that people care for. This is how at least we think about it. The first and foremost thing is build something that people want, right? Like people should absolutely love whatever you do. The second one is, hey, can you make money? And the third is how big can it be, right? That's at least how we stage gate anything for ourselves, because if you're trying to build something that people don't want, then it's never going to be successful, right? And continuously trying to figure out new ideas on what actually people want is a journey. Till the time till the time quick commerce came along in India, there was a big dearth of consumer internet startups coming. Now, for example, there's a home services company coming up. Now there are other people trying to take shot at what could a quick version of that business look like, right? But there's a dearth for about 4-5 years. So I think we first try to obsess about the right idea. And then unfortunately, the nature of innovation is that you're more often wrong than right. Like you throw 5 darts and hopefully one sticks, and and if it sticks, it better be a big home run.
What was the one idea that you thought was going to be a sure shot winner and didn't turn out to be one?
Well, I used to lead it. Right, so we used to have a business called Super Daily that I used to run for a fair bit of time. I'm still fascinated by that business. The way the business works is it's an early morning milk run business. Indians have this, we're uniquely, the only people in the world where we get fresh milk delivered to your doorstep.
Yes.
And our thought process was, that's a high density use case, right? Every apartment in your house, in your neighborhood basically gets that. We want to use that chassis. The way we equated it was, Swiggy is like a car. It takes you from point to point. It's more expensive, but gets there you fast. And this is a chassis which is like a train, right? It's cheap.
And it'll eventually get there.
Yeah, it gets there, but it's not necessarily point to point, right? Yeah. So that was what our thought process was. We said, can we bring down the cost of logistics to like a single digit rupee that opens up the market in a big way? We don't need to make these big market size, baskets to bake. I'm fascinated by that. It's just that we never could make the transition from getting people to buy just only milk to buying other stuff, right? We got pigeonholed into, like a milk delivery provider. But I think people had a lot of love for it. It's a business that at least I couldn't figure out how to make money off it.
Yes.
And that was a bummer, but yeah, it was what it is.
Well, you've got to try. I think that's part of being an entrepreneur. Nitin, have there been any ideas that you thought would work and eventually didn't?
We have tried a bunch of them, and I think, it's around capital markets, so I don't know how many people will relate to it, but...
You have a room full of bankers. If this room doesn't relate to it, then we have a larger problem.
Yeah, so we thought people, who trade, make money, make profits, etc., but they don't have sufficient capital with them to be able to survive of this. So for example, if a person's got 1 lakh rupees and he makes 25,000 rupees a year, that's amazing return. But with 25,000 rupees, he cannot survive in the markets. So we thought, we will create like, this platform called Open Trade, and we will get him to display his trades, and whoever wants to follow him will pay him whatever little money, some 200, 300 rupees or something, and then we could get him like a few thousand people following him, and yeah, it failed spectacularly because we didn't think about the fact that people choke when they have to perform.
Yes.
So 99% of them started choking. So basically, when they were private, they were performing well. But then as soon as they came onto this platform,
the pressure of performance. Yeah, absolutely.
Yeah, and second thing was a lot of them started doing coaching and etc. So it was a disaster. I mean, we pulled the plug out long time back, that.
And that, while we're laughing about this today, I think there is an important lesson here, not just for startups, but for founders in general, knowing when to pull the plug and to be dispassionate about decisions. It's not something that happens overnight. It's a journey. I mean, for you, what has been the hard part of kind of creating this distance between decisions that you were deeply passionate about, but knowing when to let go?
Again, like what I said earlier, when we're starting off, we kind of think about the worst case outcome, and then get everyone on the team to be also in on the worst case outcome, saying if this is not how the platform is supposed to be, we will decide to pull the plug, and we've taken multiple such decisions, and people have been okay, all right with that.
Yeah, I think it's important to also communicate that with clarity and consistency, because you are taking people along with you. Funny, take me through what it's like at Swiggy. I mean, how do you create that distance between business decisions and founders' passion?
Yeah, I mean, I think we had a really tough time when we started out, right? Because we're just passionate people who, look at things and we would like to do stuff. But over a period of time, I think, and see, to be honest, there's also a very fine line between perseverance and stupidity, right? Like, and it's very difficult when you're in the thick of things with the horse blinds on, with waking up every day, because you have to will yourself in many ways, right? Because a lot of people won't. You face more rejection than approval or validation, and you have to be your biggest cheerleader, which is why I would say I generally don't advise people to start companies by themselves. It's lonely enough. And you need to have someone who props you up when you're feeling really down, and it'll happen in many ways, right? For us, I think because we've been fortunate to have a couple of successful businesses, and we've made enough mistakes, we now do have some sort of a stage gating process, which kind of mirrors, let's say, what the outside world has. Like, you get a particular amount of capital to first prove that, people do like you.
Yeah.
Like, you're building a product that people love. Your retention rate, NPS, whatever metrics are actually good. You do that, then you unlock more time and capital for yourself. You do the next stage, you unlock more capital and time. At any point of time, if it doesn't look like the next stage is happening, or you've exhausted your capital, passion still do play a role. I mean, that's why you have a CEO who comes and says, I still am passionate, let's give it a few more, shots on goal. But otherwise, we do have a process to bring some semblance of, normalcy or rationality rather to that process. And it's worked out okay for us in the last few months. We actually have shut down, which was a big problem for us before. We actually have shut down a few projects. Like Super Daily is one of the things that was a painful thing. We said, okay, fine. It's not really going out the way we want to. Let's now focus our bets on
what's working. But picking up on what Nitin said about performance pressure, now that you're a listed entity, are you feeling the performance pressure to deliver quarter after quarter?
I mean, we're freshly minted. Right, so I don't think we wake up.
Do you look at the stock price every day, every few hours?
No. I mean, not really. I mean, I do look at it when someone pings and says something happened, because the markets are quite crazy. I mean, Nitin knows it better. We did nothing, and then we went to, like 100% or 50% more than what our listing price was. We did nothing and we went 50% lower as well, right? So I don't think we control these vagaries. It's a little bit like, how do you build for the long term? You need to keep focused on that side. We obviously have a fiduciary responsibility to do right by our shareholders. And to be honest, in that sense, while we've not been formally listed, we've had a large group of shareholders who've been there. We've been in the business of keeping them abreast about what our strategy is, why we're doing what we're doing. So I don't really think it's been a big shift, to be honest. The big shift, of course, is there's a lot of media coverage at this point in time.
Yes.
Right? That's one shift that we're getting maybe accustomed to a little bit more, because I don't know what I'll say today that might make the news tomorrow. But I think that's a little bit new for us. But otherwise, from a shareholder perspective, thinking long term, we've been true to that. Right? I think we've been public. Of course, the right thing, which a lot of people, you start off by question saying, hey, when is profitability going to hit? We are definitely mindful of profitability, but we do know that when an opportunity is here for the taking, it is the fiduciary responsibility to do right and invest at this point of time, right? So, yeah, I mean, so far so good is what I would say.
And at every opportunity, you've got to wear your Swiggy sweatshirt, t-shirt, whatever it is, and plug the brand, right?
Yeah, we're a consumer tech company, guys, Swiggy.
Well, you're a consumer tech company as well, Nitin. Where's your t-shirt?
No, I didn't carry that on me.
No, but Nitin, what I want to understand.
This is also our, this is our 11th year anniversary, guys. We have a party that's going to kick off in a few hours from now. So.
Oh, from a few hours from now. So we do have to give you a big round of applause then on turning 11. And may the party continue into the wee hours of the day, and and Swiggy whatever you need. But Nitin, the pressure of having to deal with all kinds of stakeholders, now listed entity, public markets, not something that you have to deal with. Did that make it easier for you? Because in a way you were only answerable to yourself and to your core team. Did it make it easier for you to take bigger risks, bolder decisions?
Definitely. There is no two ways about it, because the way we plan at Zerodha is at least 5 to 10 years away. And so all the competition is really looking at quarter-on-quarter growth and etc. But and that's a big advantage. That's a huge moat to have, where you don't have to really compete with someone on the same time scale. So.
Yes, so let me end then by asking, you said you're building for the next 5 to 10 years. You have the luxury for doing that. They have to deal with a lot of pressure, and perhaps that constrains their ability to do what they would want to do. 5 to 10 years, what's the roadmap? What should we expect from you?
No, I mean, I can't give an outcome. Because again, outcome is not really.
Sure, but a broad roadmap, though.
Yeah, I mean, hopefully,
or priorities.
Hopefully a bank.
Hopefully a bank, okay.
And hopefully a bunch of these things that we are doing works out well, like the insurance business or the mutual fund business and etc. So hopefully, our revenues from broking is less than 25%. So that's like the 10-year goal of the business.
And in terms of revenue, is there a number that you have in mind? I know FY26 you said 10,000 crores is what you hope to be able to do.
No, this year is a down year, because everything is down by 30 to 40%.
Yeah. So that you've got to rescale that ambition. Funny 5 to 10 years, what's the ambition? Where should we expect Swiggy to be?
Yeah, I mean, our vision, as we've articulated it, is to elevate the quality of life by delivering unparalleled convenience. So delivering convenience is what we squarely...
He almost sounds like the mutual fund investing tagline, right? He said it with exactly that same panache.
I'll go slower next time. Yeah, but I mean, see, I think we obsess about how can we give back time, energy, space for people to do the things they love doing the most, right? It could be taking care of your kid, it could be watching a cricket match, a hobby, traveling abroad. We want to be a part of people's lives. We want to power them and make life seamless. That's our vision. And we constantly keep exploring new stuff. Our larger ambition, as I said, is we've not put a revenue goal, profitability goal in that sense. The consumer goal we have is how can we have 100 million people transacting 10 to 15 times a month with us, all right? The eventual goal is a toothbrush test, which is used every day. But that's at least what the long-term ambition for the next 10 years. And we keep trying. We have a new concierge service. We have a new white-collar service called Ping, where we are helping professionals connect with consumers. Yeah, we keep trying stuff. Hopefully one of them is going to be the next big thing again.
The next big thing. Well, we wish you the very best of luck with the next big thing at Zerodha and the next big thing at Swiggy. Ladies and gentlemen, the new heroes of the new India, Nitin Kamath and Funny, thank you so much for joining us here this evening at the Standard Chartered CNBC-TV18 Leadership Collective. We wish you the very best of luck.
Thank you, Funny, Nitin and Shireen, for that fun and engaging conversation. Ladies and gentlemen, once again, a huge round of applause for our panelists. Well, we now close the evening with a discussion about the quiet back ends of big ambition, the infrastructure of trust, reach and repeatability. Whether it's delivering fresh meat, powering global remittances or navigating the last mile. Our esteemed speakers are rewriting the playbook for how India builds durable distributed businesses across nations. And now moving please welcome on stage our panelists. First up is Abhay Hanjura, the founder of Licious. Next up is Sanjay Gurjar, the co-head coverage India and South Asia Standard Chartered Bank. Please welcome Raghuram Taluri, founder and CEO Loadshare Networks. And finally, Movin Jain, co-founder of Skydo. Well, we have an exceptional set of builders and bankers with us who are pushing the boundaries in logistics where roads are rough, in fintech where rules are rigid, and in food delivery where habits are changing fast. So let's dive in how you guys are building, scaling, and of course, staying reliable in a world where change is the only constant. Abhay, let me start with you first. You know, Licious became India's first D2C unicorn in the fresh meat and seafood space, a category where preferences change every few kilometers. You've previously said that you've built a manufacturing company at the back end, an internet company in the middle, and a logistics firm up front. So tell us, how did you piece this complex puzzle together and then get to scale?
First of all, thank you. Thank you for having me here. Congratulations, Funny, for completing 11 years. I think he just left. Yeah. I mean, look, there was no choice really. I remember walking into Mr. Mohandas Pai's office about 10 years ago with no business plan and just an idea, and I said, ki, you know, we want to solve the fresh meat problem in India, and we want to build the Amul of milk and of animal husbandry and fisheries. And he pretty much sort of kicked me out of his office saying, ki, business plan kahan hai, right? And when we went with the business plan, you know, it said that we actually have to do all of the things that you have to, you know, you just mentioned. And we figured that, and I mean, he was nice enough to give us 50 lakh rupees back then, which must have become God knows what number now.
We would love to know. Fill it out.
But, and they're still invested with us, I think, including a last round at $1 billion plus they invested. But I think we didn't have a choice. I remember going to so many VCs at that time and everybody said, ki yaar, and it was almost like, you know, जैसे आप शॉल की दुकान पे जाते हो कि यार चाइना में क्या है दिखाओ, तभी मैच होगा तो मैच द फॉलोइंग करेंगे, अमेरिका में है कुछ तो मैच द फॉलोइंग करेंगे. Nobody understood the India problem, right? And nobody
There's no playbook, yeah.
है ही नहीं, कुछ भी नहीं है, right? तो and they're like chicken तो chicken है, मतलब इससे खा के कोई मर थोड़ ना रहा है, मतलब. And that was like, अरे मैं तो बचपन से मछली खा रहा हूँ, मैं तो ठीक हूँ, मैं जिंदा हूँ, ये क्या है? So that was the issue, right? And we figured, you know, very early on that consistency and standardization will allow us to win. And it's in the 19-20 ka farak that, you know, the difference between a good and a great company will get, you know, delivered. And just to solve for that 19-20 ka farak, we had to raise, you know, copious amounts of capital upfront to invest in capex, infrastructure, so on and so forth. And we did the Samaj Seva and, you know, diluted ourselves fully, you know. But capital in the hindsight allowed us to do a lot of stuff that had to be done upfront before doing many things. And that was imperative. That was what was required. And Yes, we built so we are farmers, we are manufacturers, we are
Yes.
cold chain operators, we are a consumer tech company, and now we are a
Logistics.
retail company as
Yeah,
well. So
yeah.
that's what we are. Yes, it
All-
takes that much effort, to just send that 1 kilo of chicken to home. Yeah.
All right, so capital was your quintessential thing for scaling up. Raghuram, load share began in the Northeast, arguably one of the toughest logistical terrains and an unusual and a very bold idea. If you were launching load share today, would you still begin there? And what is the lesson that, you've learned in that geography, doing business in that geography that has taught you about reach and resilience?
So I think when we started we were always headquartered in Bangalore. The whole core team has been in Bangalore. The reason we started in Northeast is not for any other reason. It's a cold-blooded decision to start where our clients have the biggest problems, right? So we said we have relevance where we go and solve the client's biggest problems. And in my experience, I was at Myntra at that time, and I used to find that Northeast logistics was fully broken. I said, if I have to get relevance with customers, I have to go and fix this problem. So that was the reason with which we went in. And I think it worked out very well for us because I think after that, we've never had a sales team because clients really said, you've solved our Northeast, we did a good job over there. And
Yes.
clients basically said, you've solved this problem for us. Now they automatically kind of pulled us into various different geographies wherever they needed problems.
So that was your sales pitch, yeah.
So that was the tip of the spear, so to say. And I think it really worked well for us because it established us well with them. They knew these guys can solve tough problems. I think more importantly, if you were to start today, the principle is more important, not so much the geography. The principle was to solve for tough problems. I think now what's happened is the landscape of India has changed so much that the toughest problems are now in intracity logistics in the larger cities.
Okay.
So what actually we felt when we started, we said there's no point in starting in Bangalore because well served. Never went all the way to Northeast, but now we find the real problems to solve are in Bangalore,
Delhi, Mumbai.
Delhi, Bombay,
Yeah.
Chennai, Hyderabad. So we have now reoriented ourselves to focus on these problems because that's what we feel is going to be relevant for us and for our customers going forward. And the learning has been that, what Northeast taught us is actually a lot of self-confidence, right? I think it gave us belief that no matter what the geography, no matter what the problem, I think the confidence got built up that we can actually solve it with the right tools and build it in a way that is kind of relevant and will stay relevant, right? So that way, I think it's been a good lesson. Northeast is still an important geography for us.
Yes.
But now we've diversified beyond and we are now solving like really metro city problems.
Yes.
So yeah, that's been the learning for us.
That's an interesting take that you just gave us. Movin, coming to you, your journey has been interesting. It started with a tweet that got you your first customer. And now you're building Skydo into what you call a cross-border bank, a fresh take on the old and highly regulated sector. Tell us, how did this leap of imagination first happen, and what were the early building blocks that sort of, in an industry that is driven by compliance and control, what were the early building blocks of trust for you?
I think one of the main reasons why we chose this was that my co-founder had actually been running a business, his family business, and he experienced this himself. While on the other side, I had worked at a payments company and experienced how to build the nuts and bolts of payments and how to work with regulation and how to work with customer needs on payments in India. So I think we kind of brought all these three together and realized that this is a problem we could solve. Not many had tried solving it, but we just had this belief in the long-term solvability of this problem and also the long-term size and importance of the problem. And then we started going out to some of our friends and some entrepreneurs who were actually running export businesses and started asking them how their business runs and just started learning from them. I think we spent about 6 months during this period before we resigned from our jobs and called it a startup.
Yeah. And what an interesting startup story as well. Sanjay, let me come to you now. I understand that you've been working with startups and the new age banking segment for many, many years now. Take us through, tell us in your experience how it's been working with this segment. What are the kind of shifts that you've seen in the ecosystem?
Sure. Thanks, Shruti. And very good evening to all of you. Talking about our interactions with the startup ecosystem, and let me start off on a lighter note. One thing that gets certainly highlighted every time we meet startups is the stark contrast in our sartorial choices. So, we bankers are so overdressed. The ties have come off, of course, as you can see, but sometimes, some of the time, I think the jackets will also come off. So it's just, especially Bangalore. Let me kind of emphasize on that. But anyway, so on a more serious note, so in Standard Chartered's interactions with startups, has, if I were to characterize that, probably two words stand out: exciting and enriching. And let me explain that. So exciting from a perspective of just the amount of innovation being done by this segment. It's driving change, and change, whether it's socio-economic change and whether it's ed techs of health techs or agri techs, so much change happening at a social economic perspective. Or is it client experiences, and Fanny spoke about that, completely differentiated client experiences, or sustainability. The EV ecosystem is such a fabulous example of that. Or indeed the waste recycling. And of course fintechs and paytechs and what's happening in the financial services market. So that's the exciting part, which is all visible to all of us. But the enriching part is equally important from a banker's perspective. And what happens is, as they drive innovation, they're pushing us to push the boundaries to drive innovation ourselves, to meet their needs. So again, examples, payment infrastructure, for example, the number of transactions that we're able to process, given a lot of them have small tickets, high volume business, we have to do more TPSs, right? So that, or payment as a service, PaaS as we call it, right? Bespoke solutions, or infrastructure, or supply chain financing, vendor financing, or even more structured financing. So all in all, we learn as they grow, and we grow as they learn. So, yeah.
All right, and on that note, again, each of you is building something without a playbook. So I want to know, how do you hire then for ambiguity? Do you hire generalists who can adapt, or do you get specialists with depth? And most importantly, how do you convince top talent to take the risk and bet on your vision? So Raghuram, why don't you start with that?
I think the cliched thing is hire generalists early in the stage of the company, and later you go and move to specialists. But I've seen that the best generalists are able to specialize. The best specialists are also able to generalize and adapt to the situation as required. So I think it's very hard to give one good answer to this on what is more appropriate at what stage of the company. I think what we've seen as the ones that have worked out best for us is folks who have the right mindset and who have the shared purpose, right? So it could be a generalist. There's room for generalists, there's room for specialists at all stages of the company. But I think really having folks who have the right mindset to solve the problem, I think that has been the most unique thing and most kind of enriching thing for us as a company. That also makes it the hardest one to test for when you're hiring, right?
So how are you doing that?
So I think it comes from over the years, we've developed a good gut feel for what is a good kind of we have some judgment that we've developed, but really I don't want to bank too much on that. So what we do is we actually do a lot of reference checks of folks who worked with those guys in their past lives and test for those particular attributes of mindset that would click best with ours. So I think that's a process we rigorously follow. It doesn't mean that we don't make mistakes, but I think it reduces the chances of going wrong, right? So I think that's one relatively one of the tools that we use to get hiring right. But I think it is one of the most difficult problems, no matter what company you are, to get the right talent to last with you for a fairly long time.
Yes.
We are also in that phase where we are trying to get talent for building the next level of the company as we think about building an institution, not just a company that is just about surviving. I think that's my toughest problem statement that I'm working on. And I think it goes from just being out there, meeting right kind of people. Serendipity does work a lot, but you have to make a concerted effort. It has to be, as a CEO, as a founder, you have to be, this has to be, if not your number one priority, it has to be a number two priority. Right? So that's how we think about it.
Mohan, how are you hiring the best of talent? How are you getting them on board?
I think on the generalist versus specialist debate, what we've seen is, so the industry we operate is very specialized. It's very regulated. There's been decades of history and context. So I think anything that is close to that and needs context of that, we try to hire specialists, but everywhere else we prefer generalists. For example, our head of partnerships is a specialist, our head of compliance is a specialist, but almost everybody else is a generalist. Both me and my co-founder are generalists as well. And I think the other thing is in terms of how we get the hiring equation right, as Raghu very well said, I think we all make mistakes, of course, and we are learning. But I think one of the things that has worked well for us is prioritizing first principles thinking in everybody we hire. And secondly, also hiring a notch or two below where we would like them to operate at our company. So which means we don't hire people who've arrived and who have a glowing resume, but rather people who are likely to build that glowing resume with us.
All right. Abhay, you mentioned earlier when we said that, there was no playbook for you. You're sort of changing how Indian households shop for meat and seafood. What's your advice to entrepreneurs who are trying to build trust and, are trying to build new categories? What's your advice to them?
My simple advice would be to build a company when you wear the t-shirt and walk out, koi zor se gale lagaye, zor se chaata na mare. So I think that's a very simple way in which I can speak about it. But I think more importantly, I think founders generally get obsessed with what they think is a big problem. I mean, I keep meeting founders and they keep writing to me on LinkedIn कि यार मेरे पास बहुत गजब का आइडिया, मेरे पास बहुत कमाल का आइडिया और मुझको तो स्टार्टअप बनाना है. And this, it's a good thing that the startups have sort of come out of the closet and are no longer sort of a niche, and everybody is aspiring for entrepreneurship. That's a great thing. But I think in the process, a lot of people are undermining the quality of a good problem. Yeah. So, and with no disrespect, I'm not sure if the world needs another better looking shoe or another hair straightener or whatever else. But I think the world certainly needed Alicious and so on and so forth. Right.
Right.
So and this is the power of a true problem. If the problem is deep, if the problem is tough, if the problem is compelling, then I think you have the right to grind your way into glory. But if you're going to be just changing the packaging label on your product and calling something with अब इसमें कुमकुमादी ज़्यादा है और अश्वगंधा कम है और वो वही को पैक करके दो अलग ब्रांड चिपका के बाहर निकाल रहा है. तो I think India has grown to see, grown enough to see, see through that stuff, and you'll end up building something smaller, not meaningful. So my advice is find the right problem, and the second advice is find the right co-founder. And that's it.
All right. So find a deeper problem, the right problem, and the right co-founder. Yes. Moving, you raised equity even before Skydo literally had a live working product, something most early stage founders can only dream of. So tell us, how did you convince your investors on betting big on you, and what should early stage founders really keep in mind? How do they pitch when they have no proof points?
I think, first of all, a disclaimer, when we raised capital, the market was also very different from today, about 4 years back. So a lot has changed since then. So that, I think, is one of the big reasons. But I would say a few factors worked in our favor. One, being from fintech, having worked with fintechs that were reputed to, be growing fast and doing the right thing by regulation. And secondly, I think having spotted a large problem and being ambitious enough to take it on when not many people had, and then clearly articulating our vision with a lot of conviction to investors. I think that is what helped us get that capital.
All right, I'm shifting focus now to something that Mr. P.D. Singh mentioned in an earlier conversation, about short-term financing tailored for startups. Sanjay, what kind of credit underwriting criteria are banks like yours putting in place to assess the underlying startup? If you could throw some light on that.
Yeah, that's a very relevant question. So, startups, new age economy sector, etc., they're all hyper growth in nature. So clearly the traditional models that work for us in credit underwriting for banks doesn't work. We have to look at things in a very different lens. It's also a fact that startups will typically have cash burn, will typically run for some time with a lot of other issues just to chase growth or market share or whatever, and then progressively move to profitability. So we have to also kind of factor that in. The good thing, of course, is that there's a lot of equity, right? That's kind of backing it. So keeping all this in mind, when we look at credit underwriting standards for startups, we look at it purely from a sandbox perspective. And what I mean by that is we typically then use a parameterized approach to lend to this segment. What are we focusing on? Largely on the liquidity situation in the startups, which is driven by factors like cash burn, cash runway, or the cash to debt ratio. And then we overlay that with a number of things, which is like investor profile or the industry market share or the funding stage, etc. And then reach a risk appetite that this is the working capital that we'll provide. We also then grow alongside them, right? So when it moves from the sandbox stage to what we call the hyper growth stage. So these are more mature startups, etc. And then we'll progressively move to maybe term funding and even M&A, where we've been extremely successful, for example, in the clean tech space. So it's a progressive journey, but a very calibrated way that we go about this.
And a very tailored approach as well. All right, let me now talk about compliance and regulation, two big words in every fintech boardroom. Movin, I believe Skydo hired its first compliance lead very early on. What drove that decision, and what have you learned about really balancing speed with regulatory trust?
I think the decision to hire a compliance head pretty early on was the fact that I myself and my co-founder, we are outsiders to cross-border payments and to compliance, and we thought that it's best done by a specialist, as I spoke about recently. But I think the few key learnings for us have been, one, have belief in the authorities, in the regulator, in the government. They want the same thing as most of us want, just that their constraints are very different, their context is very different, and to some extent the sphere of their knowledge is also very different, and the last thing is something that we can try to change. And I think the other thing is have a first principles understanding of risk. So it's not really compliance, the lens that we usually think when we think about regulation. I've learned to now start thinking of it more from a risk lens, and compliance is ultimately a formality, but what everybody is trying to solve for is risk.
All right, let's bring me to my next question. We've seen some high-profile failures of how governance gaps can really bring companies down. Raghuram, how do you ensure transparency in your organizations, especially private companies where scrutiny is limited? How are you doing that?
I think it's very straightforward. According to me, there is you're working. I think we just have a very clear mechanism of saying this is some basics that we follow. There's no rocket science about it. And we have confidence that if we are doing the right thing, and if we are reporting things as they are, there might be things that are not going and that might not be looking pretty for you, but we will come out for the better. It's a very strong reflection of your own personal ethos and your ways of working, of how you are. So that's why we don't have any dissonance. It doesn't mean that we've not had any tough times, right? There was a time when we had a issue where one of the team members made an error, and because of that our revenue seemed to be inflated for some time, for like a month. It was a mistake. There was no question. We just had to. I went to the board and said, look, this is the issue that happened. This is the extent of the issue. This is what we are doing to correct it, and this is what we do to make sure it doesn't happen again. So, and I was expecting some kind of a strong kind of a thing from the board saying, look, why did this happen? You should have been more careful. I think people appreciated the fact that we spotted the issue and we raised it immediately and we solved it. So I think this is just a very small example, but these kind of things, if hidden for whatever reasons and kind of just they compound and then they become too big for you to kind of come clean with it. So that's why our simple philosophy is keep things simple. If there's anything that is off, you just be transparent and candid about it and make sure that you don't do it again, or you don't have that issue. It never happens because of intent usually. So I think and make sure that those gaps are plugged and just stay straight and clean. There is a lot of value creation that can be done just by doing business the good old fashioned right manner. There's no need for any shortcuts and kind of complicated funny things to be done. So we've kind of played by that playbook, and I just think that the whole governance thing is a thing about whether you can see black or white. You can't say I'm seeing grey in things, right? So I think it's a very straightforward thing in my mind.
Seeing black and white, Abhay, what's your philosophy? How are you bringing transparency at Licious?
I mean, look, so Vivek is not here. He's my other co-founder. He was earlier with Helion Ventures, which was a venture capital firm. So I think he saw very closely what lack of compliance does to stuff. And then we had Mr. Mohandas Pai on our table, board, everything, So he used to always tell us that, I used to, give the MIS to Mr. Murthy, by the 30th of every month, and I had to have 95% accuracy ready. So why can't you guys do it?
Yeah.
So that was always
Are
a
you doing that?
provocation. Oh yes, of course. And I think for the last 10 years, every first of the month, I think he used to send folks revenue and MIS for this month. And I think last 2 months we beat him to it. Sir, here is the revenue and MIS for this month. So that was a big positive. But I think, look, the founder has to take direct responsibility of compliance. Meeting internal auditors, on a timely basis, conducting external audits, periodically, even when you're not. So we did a vendor DD even when we are not raising money, right? That's just good for the books. On day one, we hadn't raised 1 rupee of capital. Vivek said, we'll keep KPMG. I said, bhai, paise kahan hain? Kehta, nahi yaar, KPMG nahi karenge, to nahi karenge, right? So we've always had big four. So the point is that either you're born with this or you're not. I remember we have not missed a single board meeting over the last 11 years now. We just completed 10 years.
Wow.
Not even a single board meeting. Not even the day of my wedding was I allowed to miss, the board meeting. Shadi ho na ho, board meeting ho.
I see Mr. Pai smiling, yes.
Yeah, so I mean, this is a fact, right? And I think this then becomes muscle memory. I think if founders can lead from the front, I think they become, great role models for what is acceptable and what's not. You can't just leave it to your CFO and say, ki yaar, CFO hai, dekh legi, right? I think the founders have to take direct ownership, and I think this helps, build transparency. We are never scared to go to the board and say, yaar, boss, is maine apna, matlab, we're not squeamish about, yaar, burn mein kya ho gaya, kyun ho gaya. I think it is the reality. You're building a new category. There are many unknowns, and I think the more transparent, you are with the board is also comprised of human beings who want you to succeed.
Yes.
Right? So, and they reciprocate that. So I think most founders just get worried, ki main ye kar dunga to kya ho jayega. I think it's just that fear that they continue to live in and then do, don't do the right stuff.
That's a good point that you make. Sanjay, having a ringside view of the startup ecosystem of the last decade, share with us some of your key learnings that have, that you would like to highlight.
Yeah, I think, at Chartered, obviously, as you mentioned, we've been dealing almost for a decade with startups. But, the startup ecosystem, I think, is so symbolic of new India, of a new resurgent India. And it really fills up us with pride to see the young and entrepreneurial spirit. One almost wonders, I wish we had that when we were kind of at the same age. Though, of course, the enablers were not there, to be fair. So they have solid enablers now, whether tech infrastructure or government initiatives or capital availability or client behavior and the entrepreneurial spirit. One particular learning that really stands out, I think, for all of us, bankers or otherwise, from the startups, is this acceptance of failure. I think the desire and urge far surpasses the fear of failure. I think that is a paradigm shift in the new India that I spoke about. So I think that's lots and lots of learnings from there.
All right. As India's startup ecosystem matures with initiatives like we've got Startup India playing a key role, but what more really do you think the government could do to support businesses in logistics, fintech, and of course consumer tech? Abhay.
If the government can stay out of our business, that's the best
thing
that they
can
do. I think they should just do governance. I don't know. Look, for us, there has been no sector before we came, You'd be shocked to know that India didn't even have a ministry for fisheries till about a few years ago, and India was exporting a few $1 billion worth of, fish and seafood. So unfortunately, our sector had been relegated to the Kali Theli and the wet market. So maybe I was born to, see this change through. But I think what governments can really do is focus on, at least in our sector, focus more actively on food safety. I think India the value of human life is, absolutely nothing.
Yeah, it's unfortunate.
It's unfortunate, and I remember speaking, to some regulators, and they said, Abhay, I don't know, we don't know what to do. This is a country of 1.4 billion people, and how do you regulate these people? How do you possibly go to every Pani Puri wala and sort of enforce, some regulation, or every meat shop and enforce some regulation? So we believe in the larger human good and that everybody will do a good job. Be that as it may, but we know where Wuhan was and how coronavirus was given to the world. So I think food safety cannot be taken lightly at all. If government can focus more actively on it, I think consumers will be the long-term beneficiaries of safe food, which is better for their families. If there can be some stuff that can happen actively around that, I think that'll be great.
All right. So first, stay out of the business. Second, food safety. Move in.
I think I resonate with what Mr. Pai said. I think every official in the government, every minister, I think needs to surround themselves with consumers, needs to surround themselves with people who are actually affected by their decisions. I think that is one thing that, while I do see some of the regulators and some of the authorities doing it well, but I think they can do it more and much, much better than today, which just helps them take better decisions, be more empathetic about the outcomes of each of their micro decisions that they take. I think the other thing, which is kind of a pet peeve that I've had for a few years, is I think I feel like in our country, the government sometimes tries dictating business models or who should do what or who can make how much money and so on. I feel that's not the government's or the regulator's job.
Yes.
The regulator's job and the government's job is actually to draw boundaries and then give the freedom of choice to entrepreneurs and let them do what best they can.
All right. Raghuram.
I have 3 points on this one. Number one, I was just in Noida a few days back, and I felt like the quality of infrastructure was so good. And when I was chatting with my cab driver and a bunch of other colleagues, I think the other big thing was we were seeing a good growth in the business in general in Noida and in UP. And I'm just taking that example to prove a point that I think in some ways the law and order situation improving, the infrastructure improving has led to a lot of kind of ripple effects in terms of businesses doing better over there.
Yes.
So I think that's something for that to be done in multiple other parts
yeah.
of the country for ease of doing business to get better. Number two is, I think just like in Bangalore, I would say specifically just logistical issues being handled. I think it's a raw nerve that everybody is kind of touches. I think infrastructure improvement, especially for improving logistics and making things safer as well,
Correct.
I think is a big one. And last one, I think in very tactical and very specific to logistics is, we have a taxation should enable rather than kind of like stop business. Right? In this specific case, like there are companies who want to outsource logistics, they are slapped with an 18% GST, right? And therefore they build up their own captive fleets. I think it's a suboptimal use of resources, whereas there are third-party logistics companies like us who could be benefiting from higher scale. And that enablement, if it were done, then each of us could focus on our core and do a better job of that, rather than people trying to do multiple things. I think that's a taxation switch on, switch off that kind of makes life so much better for at least in our industry.
Very, very valid points made there. Before I wrap up, one final question to all of you. Before we close, each one of you is building out of Bengaluru beyond the obvious. What is it about the city that gives your startup its edge? I'll start from you, Mohan.
I want to say the weather, but
yes, I think the weather is fabulous.
I think being able to talk to anybody about startup ideas, being able to bounce off ideas, I think is the greatest thing that I've seen about Bangalore. And I've been here now for 13 years, so almost stopped realizing it on a day-to-day basis, but recently was talking to somebody who's a mentor, but also an entrepreneur, but in a different city. And he was astonished. I was inviting him to Bangalore to exchange ideas with a few people in his industry. And he was just astonished and asking me, Mohan, is it really true that I can meet people at a cafe and discuss my startup idea and they will be willing to help me? Like, what will I say to this person? How can I help this person in that 1 hour? Why would he have coffee with me? And so on. And I had to actually literally explain it to him. Yes, this does happen. You might have seen it in shows about Silicon Valley and so on. It is happening in Bangalore for the last many, many years. I've benefited from it. I've actually passed it on to others where I could. So I think that's a key thing about Bangalore, culture, which I feel on a day-to-day basis we all take it for granted, but it's not there everywhere.
All right, Raghuram.
Yeah, I think I see Bangalore as a hotbed for innovation on logistics in particular. I'll take a small example. Here we are, every new idea, or most new ideas germinate from here. Licious, I'm sure, was Bangalore-based. Swiggy was Bangalore-based. And what that allows, Flipkart, Meesho, they're all Bangalore-based, Amazon. So I think what that allows in our particular case is we are able to, and ours is a last mile logistics company, we want to give riders access to all kinds of earnings opportunities that require rider. It could be food commerce, food delivery, it could be quick commerce, it could be bike taxi, although it's banned for now. and e-commerce, right? And we find over here an ability to be able to merge all of these together and package it in a way and we're working with clients who are also open to innovate. So that makes it very special for us to do business over here. And I have the saying, what Bangalore will do today, Belgaum will do in 2-3 years, and Bihar will do in 5-7 years, right? So I think we see that if we were to build for Bangalore, and this is a little bit antithesis to what we started building out for Northeast first.
Exactly, yeah.
But that's why I said if I were to do it today, and which is what we're focusing on, we want to crack the Bangalore problem because that opportunity is there, that openness is there, and then it gets adopted. It's a matter of time that the solutions will find relevance to rest of the country, right? So therefore, I feel very excited about building out in Bangalore.
All right, Sanjay, you agree with the two of them?
Oh, absolutely. I think it's Bangalore, infectious entrepreneurial spirit. I mean, that it just hangs in the air. I mean, it's amazing how it's very different. It's very different from every other city, honestly.
So, infectious entrepreneurial spirit. Abhay, your final words.
I'll just borrow his words. So, I mean, I'm from Kashmir, and I remember like talking to somebody recently. I said, hey, you know what? It's been a long time since a great piece of art like paper mache or some pashmina or some carpet came out of Kashmir. And somebody said, you know, hawa mein wo baat honi chahiye taaki karigar ka man kare kaam karne ka. You know, if there are no patrons for art, then art will die. And I think Bangalore has just unlimited patrons for startups and experimentation. I think this is a place where almost everyone is rooting for the next unborn startup and they want to support it. They want to be the first beta customers. They want to try you, they want to forgive you, they want to give you feedback, and they want to check with you to say, hey, what did you do about my feedback? I think, jaise inhone kaha ki yahan ki hawa mein hi kuch hai.
Okay.
And I think because this place gives you that permission, I think it just makes everything, all the other problems like traffic, ye wo, tech ki salaries, VCs not listening to you, all of that drowns away, you know, when you... This infectious energy is just...
So the baseline, yahan ki hawa mein hi kuch hai. Well, on that note, it's time for me to wrap up our discussion. Thank you so much, panelists, for your insights, and it was an absolute pleasure speaking with all of you. Thank you so much.
Thank you.
Well, this evening we've heard from those who built businesses, quiet ones, early ones, unpopular ones, and in doing so changed how India works. From the Standard Chartered and CNBC-TV18 team, thank you so much for joining us here this evening. Please join us for dinner in the pre-function area. Thank you so much.